Hello, my name is Ron Lambright with Hope USA. Hope USA stands for Home Ownership Program for Everyone. And if you want to buy a home, there's absolutely no reason for you not to do that. If you have credit challenges on your credit report, we are more than glad to help you to get those straightened out so your scores and your credit report will be strong so that you'll be able to qualify easily for a home loan. We've been in business for 17 years. We're locally owned right here in the Charlotte area, and that makes us one of the oldest credit repair companies in the United States. We're proud of that because most credit repair companies you can't always trust. In fact, my favorite client is a person who's had a bad experience with credit in the past because we're going to restore their confidence that someone is doing it right. We have an A+ rating with the Better Business Bureau. We don't have one single complaint with the Better Business Bureau in those 17 years because I'm the complaint department. If someone is unhappy, I do whatever I have to make them happy. Your reputation is all that you have. And it's our desire that you become part of our family, that you're not just a number. And we want to help you to reach your goals just as quick as we can. I think we get as excited as you do when you're able to qualify for a home loan because it makes us all feel like that the hard work has been well worth it. When we look at your credit report, naturally there are things that are on everyone's credit report that should not be there. Incorrect information, accounts that don't even belong to you, old accounts that should have been deleted a long time ago. We will assist you in doing that, getting rid of those things off your credit report, because as they're deleted off your credit report, it cleans up your report, helps your scores go up, and puts you in a position in a place where that you can do what you want to. We're also prepared to help you with assisted negotiation if necessary. The reason I say if necessary is because we will not have to get everything off your credit report to get you ready for a home loan. However, sometimes there's an item or two that the loan underwriter says that we have to take care of to get approval. We will help you negotiate that out, hopefully at a lot less price than what's on the credit report. We will try to get it deleted as part of the negotiation. If not, we will at least get it updated to a zero balance with the credit bureau, because once it becomes a zero balance, the loan underwriter won't use that against you anymore. We also look at your current credit because it's real important that you have established current credit, that you're paying on time, keeping the balances at a very low balance, because all of these things together cause your scores to go up quicker. The credit cards, the negotiations, the deletions off the credit report. Because we've been doing credit repair for so long, we know what it's going to take to satisfy the loan underwriter. And when we get through with your file, we want you to be able to pass that easily. You're going to have a 24-hour portal that you will love. You'll be able to look at your file live at 10 o'clock at night when we're not there, and you'll be able to see did that item ever get deleted off Equifax? How about TransUnion? How about Experian? Many times it'll answer the question that you have. Naturally, if it doesn't, all you've got to do is email us or leave us a voicemail, and our staff will get back to you the next day. Our goal through the whole process is to make sure that you're well informed, that you know exactly what's happening on your file. Communication is very important to us, and we have a lot of different avenues that we use to keep you up to date so that you'll know exactly what's happening on your file. So you're never a bother to us. We want you to call us, and that's what we're there for, is to make this process just as easy as we possibly can. And we're there, like I said, to help you in any way that we can. So my phone number, our main phone number is 704-499-9696. Again, that's 704-499-9696. Please call us. We'll be glad to help you to realize your dream of home ownership. One of our slogans is that bad credit happens to good people all the time. And before I close, let me just say this to you, that when I was young, I didn't know what I know now about credit. I had to learn things the hard way. My dad taught me how to work hard. That was all he knew. He paid cash for everything that he did. And so I got several credit cards. I maxed them out. I lost those credit cards. I thought I would never have good credit again. And then got older, wanted to buy my own home, found out that to do that, you have to have good credit scores. To have good credit scores, you have to have credit cards. To have credit cards, I needed to learn better than I did the first time. So I took the process of educating myself. I love to help that person that just doesn't know. But we have also many clients that at one time had great scores, but because of an accident, illness, job layoff, whatever, the scores are not where they want them to be now. I love helping that person get back on track. And it doesn't take a long time. It's amazing just in a few months' time how much you can improve your credit score. You don't have to take a year or two to get your credit where you want to. Just in a matter of a few months, you can turn your situation completely around. So again, one of our slogans is that hopeless is not in our vocabulary. I don't care whether your scores are in the 300s or 500s. We can help you get on track and help you to get to a place where that you can qualify for a home loan. Thank you for allowing us to be here today to speak to you.
Hey guys, thanks for having me. My name is Matt Krasnoff. I am a loan officer with CBC National Bank. I don't expect you to know who CBC National Bank is. It's a very small bank, okay? Very small community bank, but that's good. I'll tell you later about that. I am here to help you get a mortgage, okay? To get a mortgage, I think the thing is people think it's harder than what it really is, okay? It is my job to go ahead and take all the frustration out of you and all the worry and really just help educate you and also make it a smooth transition from A to closing on your home and getting into your beautiful house. All right, so here's how we're gonna get you a mortgage, all right? I would like the chance to meet with you guys, talk to you over the phone, we can communicate by email. We live in 2017. There's many different ways we can chat over Facebook, whatever way you wanna do. I am available in Facebook, Twitter, you name it. All right, but anyways, here's the thing. Most of you guys are probably renters, correct? Okay, and the hesitation is maybe you think renting is a better gig possibly or easier because you're already doing it than getting a mortgage. Maybe you just feel like getting a mortgage is really, really, really tough. So I'm gonna go ahead and break down those barriers for you, okay? First off, and the second thing is people think mortgages have really big payments to go along with them. Oh, mortgage payment. It's gotta be heavy duty, right? But most of you guys are renting, correct? Okay, so here's the things. I'm just gonna give you some bullet points and maybe, eat the fish, leave the bones. Hopefully a couple of these bullet points just mind blows you. First off, most people do 30-year traditional mortgage terms, okay? Most people are leaning towards the fixed terms, all right? Well, 30 years is a long time, all right? So how can that 30-year benefit you with a mortgage payment? Every $1,000, $1,000 is a lot of money. Is $1,000 a lot of money a year? It is, right? All right, but every $1,000 on a 30-year term only changes your payment by $6 to $8 a month. That is it. Don't believe me? Save $4 every month, 12 months in a year, 30 years, you're gonna have, there you go, over $1,400, right? It happens, all right. So maybe that doesn't bother you so much with the $1,000. Why am I telling you that? Because maybe you see a price of a house, you're going, holy smokes, look at the size of that purchase price, that's gotta be a big payment. Well, every $1,000 is only change your payment a little bit. Now here's where I wanna get into it, okay? What if I tell you, how much are you guys renting for right now? Anywhere from what? $800, $1,100, $1,600, really? I feel like I'm on the Price is Right here or something. All right, check this out, all right? I'm not kidding you. A $100,000 purchase will get you a payment around $675 a month. Is that lower than some of you guys rent? Mm-hmm. Okay, how about this? A $150,000 purchase will get you around an $820 payment. And I'm talking about a total payment. That includes the taxes, the insurance, the mortgage insurance that nobody likes, but that's okay, it's tax deductible. All right, so anyways, next thing, let's go as high as $200,000. A $200,000 purchase, for all you guys that have the 4-digit numbers in your rent, a $200,000 purchase will get you around $1,150 a month. $1,150, look at that guy's white eyes, $1,150 a month. I'm not kidding you. Why? Many reasons. One, my rates are really low. I'm not just saying that, I like to show you why my rates are really low. Because I work, like I said, for a very small community bank, so our margins are very, very, very small, okay? We're not trying to support many different salaries. We only have a small amount of workers in our place. I can actually call the president right now. It's actually pretty cool. Anyway, other things I like to say. You guys just heard about credit, Okay, credit is important. Let me just go ahead and throw out some bullets here. My minimum credit score I need is a 600 just to go ahead and get you qualified for at least one of the programs, okay? But there are other things that go with your credit other than just your score, okay? You guys probably heard this term or know this term pretty well. It's called collections, right? But don't feel bad. A lot of people say, I got bad credit, I got collections. Why should I even bother trying to apply for a mortgage? Well, here's the thing. We are flexible. We actually allow you to have some collections. And here's another thing. Nobody's going to judge you for medical collection. If you break your leg, that has nothing to do with your personality. Well, maybe it does. But I'm saying we're not going to hate you if you do something like that. So if you have medical collections, we're not going to make you pay off your medical collections. However, collections do affect your credit score. So you are going to want to talk to somebody who can, if you're trying to generate and raise your score, you want to talk to them if it's worthwhile to negotiate paying those off. Secondly, collections in general that are non-medical, we have programs that say you're allowed to have up to $2,000 of balances in collections. So if you feel like you've got some collections and I can't qualify for a mortgage, how much do those add up to? If they add up to $1,999, guess what? I'm not going to ask you to pay them off. Okay? So I hope some of you are starting to feel like, wait, maybe I got a chance to get a mortgage here. Well, you don't know unless you talk to me. So there's many things. We can pre-qualify you, which is just a conversation. That's all it is. You're not buying anything. You're not doing anything. You're just getting pre-qualified. What do you need? This is how much money you'll need. If you need a down payment, there are some programs that don't require a down payment. Obviously, if you don't have any skin in the game, the credit scores may be increased. I know with VA loans, if you're military, you need a 620 credit score. USDA, if you're buying someplace that is eligible for USDA, it's like like more of a rural area outside the county, 100% program there. I also am approved many down payment assistance programs, but they do have income limitations. But we can talk about all that. I don't expect to talk about all that right here, but call me and we'll talk more about it. My phone number is 704-737-9817. Again, my name is Matt Krasnoff. I work with CBC National Bank. You can have free bottled water. We are offering free water. Or you can email me. It's Matt, Krasnoff, Krasnoff, as in Frank, at cbcnationalbank.com.
So now we're going to get into like the process of actually buying and selling your house. Some pretty exciting stuff. All right. So like I mentioned, I want to thank the sponsors for this, Matt Krasnoff with CBC National Bank and Ron Lambright with Hope for USA. Our partners and did a great job. The Jones Zone Podcast. Hey, if you're not subscribed to the Jones Zone Podcast, what are you doing? You need to subscribe. It's Charlotte's #1 podcast. My mother even said so. All right? It's all you gotta do is Google it. It's on iTunes and SoundCloud, and search the Jones Zone Podcast. We talk to real estate professionals. We've talked to lenders. We've talked to attorneys, appraisers. We've talked to pest control people. We've talked to all sorts of people. And then we also interview local business owners and entrepreneurs. So we cover a lot of different stuff. Jones Zone Podcast on SoundCloud and iTunes. Just search for it. There's only one of them. And then our book. If you don't have our book, what are you waiting for? Go to thejoneszones.com with an S /books, plural, and then say that you want Just Sold. The reason it's books, plural, is because we have an ebook called Clear to Close, and that's basically kind of a book just for first-time home buyers. So it's an ebook, it's really short. This one's short too, but this one is specifically for home sellers. But you're going to want a copy of this if you are considering selling your home. Just Sold, how to sell your home fast and maximize your profit. All right, now the first step in buying or selling your home is making the decision to buy or sell your home. You know, why do you want to move? Is the timing right? What do you have to move? Are you being relocated? Is your company sending you to Michigan? Do you have to move? You don't have an option, so you need to list your house. When I say, do you want to move, or why do you want to move? Have you guys outgrown your space? You know, you guys are expecting another child? You know, what's the situation that's making you guys want to move? And is the timing right? Do you guys have a lot going on in your life? Moving can be a 3 or 4 or 5, sometimes even 6-month process. If you build a new construction, maybe even longer. So if your family is already going through some sort of stress or crisis, Is it the right time? So take the time and really make that decision and make it a smart decision. And make sure that you're doing the right thing by moving forward. And then how's the market? Is it a buyer's market or is it a seller's market? So a buyer's market is when there's more sellers than buyers. So buyers have the advantage because there's a bunch of houses to sell. And the opposite's true for the seller's market. That's when there's a ton of buyers and limited inventory, so the sellers have the advantage. So know if you're going to buy or sell, which kind of market you're in. Step 2 is to get pre-qualified. When you made that decision, when you and your spouse, or if it's just you, when you've sat down and you've made that decision to actually move forward, the first thing you need to do, whether you're buying or selling, is to get pre-qualified. You need to get a financial snapshot. You need to know where you stand. You need to know your purchasing power. How big of a house can you afford? How much can you spend? Maybe it's more than you thought. Maybe it's less than you thought. But don't go out there house hunting and then be caught off guard when it's something different. Being pre-qualified makes your offer stronger. And what I mean by that is if you're going to submit an offer to someone selling their house, they want to know that you're pre-qualified. Okay? Especially if they're getting a bunch of different offers. They're not going to go with someone that might be able to buy the house. You need to be pre-qualified. You need to have your finances in order so that when you send that offer, the seller knows that you can afford to buy this house. And you just avoid drama. I don't know why agents accept offers that don't accompany a pre-qualification letter. When an agent says the deal fell through, and then they say they didn't have a pre-qual from the person, dude, you just wasted 4 or 5 weeks. The deal fell through is just a complete waste of time. You put everyone through that, and for what? Because the person didn't get. It takes 10 or 15 minutes to get pre-qualified. You heard Matt talk about that earlier. It's not a long process. So get pre-qualified, whether you're buying or selling. For selling your home, you need to prepare it. Okay, and what do I mean by that? So should I get a pre-inspection? That's a question that we get a lot. We don't necessarily. It's not mandatory. It's not something we recommend. We only usually recommend it if you think there are some pre-existing conditions. If you have some concerns about your house and how it's going to, because the buyers, let's face it, the buyers are going to have an inspection. So if you think that something might come up, or you think that you should have an inspection so that you can be proactive about whatever it is, then we would recommend that. And should I spend money on updating the house? Yeah, you should. As a general statement, yeah, you should. Fresh paint, fresh carpet, flooring, those are kind of the basics. We walk into a lot of remodels and a lot of flips, a lot of stuff, and that's common in all of them, is the fresh paint, fresh floor. And then we start talking about updating the house after that. Okay, what's the biggest ROI on that? When we spoke to an appraiser, he told us that the biggest return on investment was the kitchen, master bath, and the outdoor living area, in that order, okay? So when you're gonna update your home, do the paint, do the carpet, do the floors, and then go into the kitchen, master bath, and outdoor area if you have them. Those are the biggest returns on investment. Now, is it a blanket statement that I should say you should do that? No, okay? If you don't have the finances to do that, then you can't do it, okay? I'm not saying you can't sell your house, but try to make some other minor cosmetic changes that can do that too. So it's not a blanket statement that you need to do all these updates, but it helps. I'm not saying go up and rack up a credit card worth of bills doing that. Declutter and stage your home. If you can afford to get a storage unit or something to get most of that stuff out of there, I recommend doing it, especially how cheap storage units are. I know some that are like the first months are free, so if you can do that, then go ahead and do it. We tell people, hey man, walk through a model home. There's all these new construction neighborhoods in the area, right? So walk through some of the model homes and look what those look like. That's how you keep your home when you're showing it. Unfortunately, you can't really live in it when you're showing it, if you know what I mean. Put the bills up, put the rotten fruit away, put all that stuff up. You're showing your house to sell it. So you gotta have your home prepared. Pricing the home. Now some of this is geared towards the sellers, but it's also relevant towards the buyers too. Like, what is a comp? A comp is a comparable sale. So whether you're listing a house or you're trying to come up with a number to buy the house, you want to look at the comps. okay? What are the houses selling for in that neighborhood? And what are, what's the price per square foot? What is the house with the same floor plan selling for? Go back 6 months, sometimes as far as a year if you have to, but get a good picture of what the houses in the neighborhood are selling for. You're not gonna sell your house for $395,000 if your neighbor, same floor plan, same year, same model, sold his for $350. It's just not gonna happen, okay? The numbers are what they are. We tell people that all the time because they don't want to hear it. Basically, they think that their updates or their house is worth so much more. But in the eyes of the bank and in the eyes of the buyer, it's not. Okay, you're the one that had Christmas in that home. You're the one that had Thanksgiving. You're the one that the home is so special for, not for them and not for the bank. Okay, so the deal will fall through. We encourage people to price right below the market value. I know what you're thinking. What? Below the market value? Why? Okay, here's what happens when it's priced below the market value. Just a little bit. I'm not talking about a bunch. There is a grandiose, perceived value in that house, okay? What it does is if you price your, and I'll put a chart in here when I put the video together. But when you drive traffic and interest up into your house and people think they're getting a bargain, you create a multiple offer scenario, okay? A multiple offer scenario, buyers hate them, but sellers love them because buyers have to put their best offer on the table. And sometimes that includes going over asking price. And it includes no home warranty. And it includes no seller paid closing costs. And it includes a short due diligence period and a higher due diligence check. So even though it sounds a little counterintuitive to price it a little lower, more often than not, especially in this market, it will drive the value and the offer up. Choosing the right agent. Okay, so we're not right for everybody, and you need to be careful when you're choosing your agent. We've never been fired, thank goodness, but I know of people that fire their agents. So what are different type of realtors? I'm talking about, like my brother and I, we're a partnership, so there's two of us, right? So we're not an individual agent. That's someone that works alone. Maybe they have an admin or something like that, but it's just them. And then you'll hear of the concept of teams, where there's a main team and then they have a bunch of agents that work under them. So you think that you're working with the main agent, but you're actually not. You're working with one of the ones underneath them. So research which teams and who you'll actually be working with, and find out, what style you think will fit them. National brokerage versus local brokerage. I don't think there's a huge difference, to be honest with you. Most of them are going into the MLS. They're going to have agents that are here that are working with you. So Brian and I were with Keller Williams, right? We're the largest brokerage in the country by the agent count. I don't know what's the difference between all the other Century 21 or Remax or whoever. Keller Williams seems to be doing pretty well for themselves. But you can have success with any of the other local ones too. Kind of like Matt talking about his bank. They're a local bank, they're smaller, but they're just as good as any other of the big banks. So national versus local, I don't really have much of a discrepancy there. What are the types of representation? So what I mean there is, there's a couple different ways you can be represented as a buyer or a seller. There is exclusive agency, where you're listing your house with the Jones Zone at Keller Williams, and the person that's buying your house is being represented by another brokerage. Okay, that's exclusive. We're with them, they're with them. There's also designated agency. All right, that's where you list your house with the Jones Zone at Keller Williams, and the agent that is buying the house is also with Keller Williams. Okay, so even though we're both with Keller Williams, I'm going to represent you guys, they're going to represent them to the best of their abilities, and we're not going to use the information to kind of manipulate the situation, okay? So even though we're in the same brokerage, we're being represented by two different agents, okay? And then lastly, there is dual agency, okay? Dual agency is when you're listing your home for sale with the Jones Zone at Keller Williams, and you want to buy it, and you're also listed by the Jones Zone at Keller Williams. So in that in that scenario, we basically just become a mediator, and we kind of help you through the process, and we help you through the process. We don't do that very often ourselves. We usually refer it out just to protect ourselves from any sort of liability. But legally, you're allowed to do what's called a dual agency. Then should I do it for sale by owner? No. Really, you shouldn't. Unless you have a family member or a friend that has expressed interest in buying your house, don't do it for sale by owner. And there's a bunch of reasons for that. One, it's a pain in the butt. It's a full-time job to list the house. There's inspections, you gotta show, I mean, are you gonna be there for every single showing? Are you gonna let Jeff in the house when he says he wants to see it? Are you gonna let Pamela in the house when she says she wants to see it? You gotta rearrange your whole day to accommodate all these people. There's inspections, there's appraisals. All the things that we're talking about here, you're dealing with that on top of your regular job. Do you really wanna deal with that? You don't. Now, talk about the numbers. For sale by owners, get lowballed. Okay, if you're thinking about selling your own house, you're gonna get lowballed. Now you might save on the commission check when you see the settlement statement, but you're not gonna make as much money on your house selling it by yourself. You're just not. The reason is when I'm working with a buyer and we come upon a FSBO, this has happened a few times, we lowball the FSBO. Now here's why. They're already saving money on the commission. And that's the first thing that comes out of my mouth when I call them and I tell them our lowball offer. I'm just being transparent here with you. I call the guy and I say, we're gonna offer you this. I know you're saving X on the commission, so all right, so now he's lost that money on the offer and he's working the deal by himself. And he doesn't even know what he's doing. Probably half the deals with for sale by owners fall through. And it's not that for sale by owners are bad people or they're not capable of getting the job done. It's just they've got so much more going on. They're not in the business every single day. They're not familiar with all the paperwork and all the nuances of doing the business. So if you're thinking about for sale by owner, I would advise against it unless you have a friend or family member that said they want to buy the house. Then you just go to an attorney's office and get it done. Showings. So for sellers, keep your house neat and clean. Put the pets up. I went to a showing and a chicken ran by me. That's a true story. So keep your pets and anything's locked up. Your house will have a lockbox on it, and there's a system called showing time. So when the buyers want to see your house, they let their agents know, and the agents have super keys that gets them into the lockbox. And it's all done through a centralized showing time system, which for sale by owners don't have access to. So it's really easy. It's really convenient. And then for buyers, provide feedback or submit the offer. You know, if you go to check out the house, the worst thing that happens for our listings is when we don't know if they liked it or if they didn't like it or if they're going to submit an offer or if they're not going to submit an offer. You know, so at least provide feedback and submit an offer. The offer, what is the offer? What goes in it? Let's talk about terms. So terms are the sales price, okay? The closing date, the earnest deposit or down payment, I guess. In North Carolina, you got to pay a due diligence fee. Are you going to pay a home warranty? How long is the due diligence period? That's probably about it. That's a lot, but that's about it. In South Carolina, it's 18 pages. In North Carolina, it's 12 pages. It's not a huge thing. So, and what we tell our sellers, focus on the net. And what I mean by that, and we tell our buyers that too, especially if it's a multiple offer situation. So we'll use easy numbers. Let's say the house is $100,000. It's listed at $100,000. So you get an offer for one's for $100,000 with seller paid closing costs of $2,000. So now your net is $98,000. Okay, where the other is $103,000 with the closing costs at. All right, I'm making up numbers on the fly, but you need to focus on the net. Basically, take the sales price minus the closing cost, the home warranties, and all the other stuff. Package all those together, and then see which one's the best. So don't just focus on the highest sales price. That doesn't always work if you're going to have to pay for the closing costs and stuff. In multiple offer situations, what do? Basically, we just set a timeline. If you're the seller, you say, hey, we're going to accept offers until Thursday at 5 or something like that, and then we'll make a decision after that. So it's not like a total one up. Everyone submits their highest and best offer by a certain deadline, and then the sellers make their decision. What is a counteroffer? It's exactly what you think it is. It's, you know, the buyer makes the offer, the seller makes the counteroffer. You go back and forth a certain amount of times until you meet in the middle or you're both happy. Inspections. what will the inspector do? It's more of a question of what the inspector won't do. So they climb under the house, they go through every bathroom, every room in the house, the kitchen. Some of them hop up on the roof, some of them get in the crawl space, they do all sorts of stuff. The buyers are going to spend about $400 or $500, maybe upwards of $600 or $700 on this inspection. So the inspector is going to get in there and find everything he can, which is why sometimes we recommend the pre-inspection if you know the existing stuff, because what the pre-inspection gives you is just time and convenience of doing it, rather than doing it under the pressure of being under contract. The repair request, that's just where the buyer is going to send a request. Once the inspection's done, the buyer is going to have things that they would like to see fixed, and they need to type up a repair request and send it to you. That's negotiable too, so that, if the buyer makes the request, the seller doesn't necessarily have to do everything on it. You just go back and forth. There is a must-fix list, is what I call it. I think it's Section 8 of the South Carolina contract I always talk to people about. So, leaky roofs, cracked foundations, electrical problems, heating and air problems, plumbing problems, stuff like that, the main stuff, you're going to have to fix it, which is good news for the buyers, sometimes bad news for the sellers, but the big stuff, you're going to have to fix it. The reason is this guy's going to come around, and if he catches any of that stuff and it's not fixed, the buyer's not going to get the loan. And if a buyer's not going to get the loan, you're not going to sell your house. And it's not just going to be that buyer. It's going to be any buyer that comes through. So you need to get those things fixed. The stuff on the must-fix list is must-fix. And once the inspections are done, and everyone's agreed to it, and all the financing is done, and Matt's wrapped up his loan, and everyone is good to go, we have the closing. So the buyer is the one that actually selects the closing attorney, and you do that pretty much up front as soon as the contracts are signed. We'll give you a list of a couple of the closing attorneys that we use. The paralegals will be the main ones that handle everything behind the scenes with the attorneys. They'll be emailing you, emailing us, emailing the other agent on the other end, making sure that they're getting everything. You wire your money, and you get the keys, and you show up, and you sign, and that's it. That's the process. It's not that overwhelming, but it is at the same time. You need a professional to be there with you, whether you're buying or selling. I know we covered a lot. If you have any questions, type them in, message us, we'll send them back. Check Matt out, check Ron out, hit up the Jones Zone podcast for lots of stuff. And the cool thing about these videos and the podcasts and stuff is you can watch this and we don't even know about it, okay? It's just free information, it's content for you guys to use, it's information to give you power. And we hope that you act on it, and we hope that you choose us when you do. So, all right, you guys, thanks for watching, and we will hear from you soon.